All right, good afternoon, guys. So today, the topic that we have is financial systems. Okay. Now, before we look at what's on the screen. One sec. Okay, let me take this off. Can anybody explain to me, in their own words, what is financial systems?
Sir, can I say something?
Sure.
So, financial system is an arrangement of financial organization and laws in such a way that leads to the development of the economy.
Okay. Very good. Development of economy. What else? Thoughts? What about the others? Rhythm, put yourself on mute.
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
There's too much sound. Yeah. Okay. Anybody else? Come on, guys. There's no right or wrong answers. It's just to the goal of this of today's class, right? Is to just to introduce you to what is out there in the financial system, okay, in financial markets, in the participants, etc. Okay. Any other thoughts?
Sir, as per my understanding, I feel financial systems are those which many organizations or institutions use as per to regulate funds or any kind of monetary value.
Okay. Cool. All right. Anybody else? Okay. So more or less, what you guys are saying is all right. Okay. So when you talk about a financial system, right? So financial system is a system of gels. Now, what do we mean gels? Means brings together the financial participants, markets, products, and services. Okay. And don't worry, we'll discuss each of these more in depth. Okay. Financial participants, markets, products, and services. Now, in order for a financial system to be efficient, right, it has to happen at three levels. Okay, what do I mean by three levels? It has to happen at an international level, a domestic level, and at a regional level. Okay, so when we talk about international, right, we're talking about international trade, right? So no country has all the resources that they require. So and not all countries have the resources that they require. So they what do they do? So they buy the products and services or resources from one country and sell other products and services to another country, right? So that's at an international level. Okay. Next, when we talk about domestic, can anybody tell me what do we mean by domestic here?
Uh, yeah, domestic is a thing like which comes within the country. Yeah.
Yeah, you're correct. So when we talk about domestic, right? Yeah, Sakshi, like internal. So believe it or not, right? A lot of all the states in the country, right, or in any country, they do business together, right, or with each other. Okay, you might not see it, but there's a lot of trade and commerce that happens within the country between states. Okay, and finally, when we talk about regional level, right? What do we mean by this? What do we mean by
Different regions of the country.
okay? Correct. So it could be, the south region, the north region, the northeast region. That could be at a regional level, and it also can be at a like a Southeast Asia, region. It could be an Asia region. All of that. Okay, so the classifications is basically broken up into the entire world, then within the country, and then finally at a with a specific region. Okay, so that's how. And in order for the financial system to work efficiently, right, it has to happen at all these three levels, at the international, domestic, and regional level. Okay, now what is the goal of any financial system? Can anyone tell me what do you think is the goal of the financial system?
Asset and capital allocation.
Okay. What else?
Uh, Facilitate and manage the flow of funds.
Okay.
Preserve a healthy financial services industry with any kind of financial institution.
Okay. All right. So, okay, it's not, it's fine. It's correct. Right, but with this topic, right, you guys need to think a lot broader, right? So the goal of any financial system, right, is for the accelerated growth of an economy. Okay. Now, why should, if anybody could tell me, a lot of you guys are, I think most of you guys are BCom students, right? Can you guys tell me why does the economy, why do you need to accelerate the growth of an economy? Why can't we just leave it be?
Because I think it improves the standard of living of the people of that country,
Mm-hmm.
as as well as if the economy is really good, then a developing country can become a developed country.
Okay, true. Okay. Now I have a very basic question for you guys, right? Now, if you look back, right, is life better now? When I say life, I'm talking more about, let's say, um, electricity, water, all of that. Is it better now, or was it better 10 years ago?
It's better now, actually.
Yeah. Yeah, it's much, much better now, right? So how many of you, I mean, all of you, all of us are at home only. Are you guys facing a lot of power cuts? Maybe only when it rains heavily or something like that. But 10 years ago, if everybody was using the electricity at the same time, right? Especially during summer, the circuit would overload, and they would do load shedding, especially here in Bangalore, right? So 10 years ago, life was things were a little bit more difficult, right? So now the idea is that if you accelerate the growth of the economy, right, your standard of living becomes better. Okay, and that's very important. And especially for a country like India, right, we are going to go from a developing country to a developed country. Now, when do we actually reach development? That is a different question and a different answer, and a probability completely, I mean, a different question altogether. I don't know when it'll happen, but I think we're all working hard towards it, right? By getting a job, paying taxes, all of that, right? It contributes to the financial system. Okay. So are you guys? So is everybody clear with what is financial systems, the geographical classification, and the goal of a financial system?
Yes, sir.
Okay, cool. So take a minute and write this down, and then we'll move on. Please ensure that you write the notes for everything that we talk about today. And if you have any questions, please feel free to ask. I'll give you a minute and write. Please write this down. Okay, Ganesh. So the definition of the financial system is that it's a system that brings together. So gels means brings together financial participants, markets, products, and services. Okay, and then we'll talk about shortly what are these, who are the participants, markets, products, and services. Okay, so essentially the system brings all of them together so that it's more efficient. Yes, Deepesh. So we'll talk about all of that. And let me know when you guys are done writing, and then we'll move on. Okay, cool. All right, now I have a question for you guys. Can anybody tell me how does money move in the financial system? Who are they? So first of all, who are those people? Okay, and how does the money move?
Sir, household and
Hello.
industry.
Okay. Anything else?
Sir, actually, money needs arises from the people only. So there are some regulation of the financial system who floats money to the people. So whenever the people needs money, they go to the financial system like banks and all, and they can take the money. So how this circulation of money float in the market?
Okay, cool. All right. Okay, so now let's look at this, right?
So it can be by investing in securities and markets and assets, etc.
Yes, correct. All right, now let's look at this. See, when you look at the financial, like the market, right, or the financial system, okay, you have lenders on one side. Now, can you guys name? See, essentially, when we look at it, right, there are only two types of people: lenders and borrowers. Okay, but there are different names for them. Okay, so can you guys name some lenders? So somebody mentioned households. Okay, what else? Who else will be a lender?
So banks,
That also be
Okay,
banks.
so instead of saying
Financial
banks,
mutual
institutions.
funds,
once again,
Financial institution.
yeah, financial institutions.
Corporate
That
houses.
covered everything. Okay, what else? What else? Household financial institutions.
retail banks,
Financial institution. See,
Government.
yes, very good. Government. Okay, so see, guys, financial institutions is including everything: commercial banks, retail banks, investment banks, uh, everything. Okay, NBFCs, etc. Okay, all right. Anybody else? Governments, investors. Then you guys would have heard
Oh,
venture capitalists.
MNCs, businesses.
so stock
Sorry?
exchange.
No. Stock exchange does not lend money.
Okay.
Okay. All right. So you guys are getting the idea, right? So they have different names, but essentially they are lenders. Now, why are they called lenders? Is very simple. Idea is that they have excess money. Okay. Is it clear with everyone? Okay. And we'll come to the in between. Okay. Now let's talk about the borrowers, right? Now, essentially, when we talk about borrowers, they need money. Okay. Now, who are they?
Corporate houses.
Same as lenders.
Sorry, corporations.
Same as lenders, sir.
Ah, yes, more or
Corporate
less.
houses.
Yeah, corporations. households, financial
Financial institution, government.
yeah, governments, etc. Yeah, financial institutions. Okay, so this is essentially the two sides. So how I'd like you guys to understand a lot of the things that we're going to talk about in this program is two sides of the same.
Sir, how can financial institutions borrow money from lenders?
Yeah,
RBI.
RBI. What do you think banks do? Banks keep borrowing money.
Okay.
Yeah.
Thank you.
So no worries. So here's the thing. How I'd like you guys to understand, right, is that get the idea is that it's two sides of the same coin. All right, it's two sides of the same coin. So you have lender on one side and you have a borrower on one side. Okay. Now, how does the money move? Okay. Now let's talk about the middle part here. How does the money move? The money moves in what we call as a direct way, or what we call as direct finance, and the money moves through the financial markets. And then another way money moves is through indirect finance, through financial intermediaries. Okay. Now, when we talk about financial intermediaries, these can be your banks, NBFCs, what else? Housing loan companies, etc. Okay. So essentially, these are the two ways that money moves in the financial system. One is through direct finance, and one is through indirect finance. Okay, and largely most of us, right, because we are an individual or a household, we will use the financial intermediaries to borrow money. Okay, whereas corporations, governments will use the financial markets to borrow and lend money. Okay, is this clear with everyone? Okay, cool. Take a minute and write this down, and once you're done, let me know.
Sir, who is financial intermediaries in indirect finance?
That's what I mentioned. No, it could be banks, NBFCs, housing loan companies, etc.
Okay. And indirect finance?
Direct finance. So this is your through capital markets. So investment banks, brokers, governments, institutional investors, etc.
Okay. Thank you.
All right, cool. Let's continue then. Okay. All right. Now the next thing that we're going to talk about, and this is going to be like the focus of the rest of the day in terms of the topics. Okay. Jackson, so when we talk about the stock exchange, right, that takes place in the secondary market, right? So what is basically a stock exchange, right? When we talk about NSE, BSE, and all of that, basically the stock exchange is a platform for buyers and sellers to transact, right? It's and let me be clear is that a stock exchange does not help with capital raising or anything like that. Rather, what they do is that they match the buyer with the seller. Okay, and we'll talk more about it when we're talking about the structure of the financial system. Okay.
I just have.
Yeah, here. Go ahead.
Hello.
Yeah.
You just said the stocks don't help. You said the stocks don't help in increasing the money, but like, don't companies usually do that to raise their capital as well?
Yeah, but that happens in the primary market where the stock exchange is not there. But in the secondary market is where the buying and selling of securities happen. So the raising of capital happens in the primary market, and the stock exchange.
All right, all right. Thank you.
All right.
All right, all right.
Okay, cool. Now the next thing is that we talk about the structure of the financial system. Okay, so what is the definition that we spoke about? So what is all of this? Okay, could I request everybody to put yourself on mute if you're not speaking? Too much background noise. Okay, cool. All right, now let's break this up. Okay, so let's talk about the structures. Okay, so the first thing that we're going to focus on is the financial markets. Okay, can anybody tell me what do you understand by financial markets?
Financial market is a marketplace where all these investors and product services come together and meet up.
Okay, anything else?
Sir, financial market. Just you carry on.
Okay, no, Haritha, you can please.
Okay. Sir, financial market refers to a marketplace where like creation of trading of financial assets such as shares, debentures takes place.
Okay. Cool. Okay. Fine. So I'm put a definition up here. Okay. So when we talk about a financial market, right? So it's a market where investors and borrowers can trade in financial securities, commodities, and other fungible items at low transaction costs and at prices that reflect the demand and supply. Okay. Can we all agree that this definition makes sense? Okay.
Sir, what this fungible item means?
Fungible means something that can be easily used. So for example, oil, petrol, oil, like crude oil, it could be a fungible item.
Okay, thank you, sir.
All right. Okay, cool. Okay, now let's break up the financial markets. Okay, now let's go a little bit next level of depth. Okay, so when we talk about the financial markets, right? First of all, the first one we have is what we call as the capital markets. Now, what is the capital markets? Is that it's a marketplace where capital. Okay, so when we say capital, we're talking about money. Okay, no, capital markets is a marketplace where capital is raised. Okay, and securities are traded. Okay, I mean it's not the exact bookish definition, but that's the idea. We talk about capital markets, right? Okay, so when you look at capital markets, so this is where the securities are traded and money is raised, and capital markets is for the long run, long term. Okay, and when you say long term, it is greater than 1 year. It's greater than 1 year. Okay, now your capital markets is again broken up. Okay, so it is further classified to primary markets. Okay, now what is primary markets? So this is where a company will raise its capital. Okay, And then the second one is your secondary markets. Okay, so this is where securities are traded. Okay, so when I say traded, they are bought and sold. Okay, is it clear with everyone? So you have capital. So when we talk about financial markets, the first market you have is capital markets. Under that, you have a primary market and a secondary market. Okay, now what are the instruments that are traded? And again, we'll come to the instrument part and then okay, you know what, let's talk about the instruments later. Okay, but are we clear with under financial markets? So hopefully the definition is clear. And when we talk about capital markets, it's where money is raised and securities are traded, and it's for long term. Now capital markets is again broken up into primary market and secondary market. Is this clear with everyone?
Can you just give us example of primary markets?
That's where an IPO happens.
Not sure of what that is.
Initial public offering. So that's where, like, if a company wants to raise money, right? Now let's say the company wants to expand and grow its business. They have limited capital, so they need more money. So what do is that they approach the public. Okay, the company will give up their ownership in return for money or for capital, and then they will use that capital to grow their business. And when the stock price goes up, right, the investors who bought those shares will make money. We'll talk more about equities. So in your next weekend's class, we'll talk more about that.
All right. Thank you.
Okay, is everybody clear with what is capital markets?
Yes, sir.
Okay, give me 1 second. Let me put a better definition up. I thought, okay. So it's a market where long-term securities like bonds and equities are traded. Okay. Now, like I mentioned before, capital markets is for long-term. Okay. Now, on what's on the other side is short-term, and we call that as the money markets. Okay. Now, money markets are what? Again, it's where I wouldn't say securities rather, but here this is a short-term market. Now, when you say short-term market, it is less than 1 year. Okay, and there are various instruments that are traded in money markets. Okay, and we have a topic on that, and we'll cover that at that time. Okay, so capital markets on one side, and under capital markets you have primary and secondary. Then you have money markets is used for short term. Okay, less than 1 year. So basically to just to manage the working capital of the company. Okay, so what do we mean by working capital? The day-to-day cash requirements. Okay. Third one is the derivatives market. Derivatives market. Okay. So when we talk about the derivatives market, right? It is what we call as the exchange traded derivatives. Wait, let me put the full exchange traded derivatives. So what trades here is what we call as futures and options, and we have something known as over the counter. Okay, OTC derivatives. Okay, so for OTC derivatives, we have financial instruments such as forwards, swaps, options, etc. Okay. Okay. All right. So you have your derivative market. Any other markets that are out there? There's a few more. Can anyone tell me?
Please recap derivative markets.
Sorry?
So please recap derivative markets.
Okay, so derivative markets is a secondary, it's part of the secondary markets. And basically you have in derivatives, you have what we call as exchange traded derivatives and over the counter derivatives. Okay, so when we talk about exchange traded derivatives, that is futures and options. Okay, futures and options. And over the counter derivatives is like forwards, options, and swaps. Okay, those are the financial instruments that are traded. So guys, don't worry, all these things that we're talking about, right, we have separate topics on it, but the goal of today's class, right, is to introduce you to all of the things that we're going to talk about for the next 2 to 3 months. Okay, all right. Now what else is there? What other market is there?
Sir, money market is also the part of secondary market or primary market?
Well, it's kind of both, right? Because when we talk about money markets, it does both. You can raise short-term capital and do short-term funding, everything up to a single day, up to 1 year, and you can trade within those maturities. You can trade from less than 1 day up to 1 year. So there's a combination of both. Okay. Okay. The next market is what we call as the currency market. No, so Vibhor, the idea is so OTC, right? You can structure an OTC, you can structure an option contract to suit your specific requirements. So that is because they bring in a lot of flexibility options. So that's why it's traded on the OTC.
Excuse me, sir.
Yeah. Go ahead.
Sir, what would be the instrument money market?
Okay, so 1 second. So we have repurchase agreements, commercial papers, what else? Commercial papers, bills of exchange, etc. Okay.
Treasury bills, T-bills.
Sorry?
T-bills, treasury bills.
Yeah, okay. Treasury bills, okay. Okay. So, Vibhor, don't worry. When we come to derivatives and all that, right? You'll understand it better. Okay. So, guys, the idea is to expose you guys to what's out there. So, don't worry. A lot of these things, right? We're going to cover throughout the course of the program. Okay. But the idea is to, give you, meanings to these terms and expose you to them so that you know what we're going to be talking about. Okay. So when we talk about currency market, very simple, exchange of one currency for another. Okay, so here there is no what do you call it, financial instrument for the currency market, because the financial instrument is the currency market. Okay, anything else?
Sir, currency market and forex market are same.
Yes.
Okay, thank you.
FX and currency mean the same thing. Okay, any others?
Commodity market.
Yeah. Okay.
Debt market.
Commodities market. Okay. Trading of commodities. I mean, that's pretty easy. But so commodities is not part of your program, right? So we largely focus on the first four: capital markets, money, derivatives, FX. Okay. Anything else you guys can think of?
Commodities are part of the capital market only, na?
Well, not really, because when you look at it, right, so look at what the capital markets definition is, okay? It's a place to raise capital. So you cannot use commodities to raise capital.
But sir, in capital market we deal in equities and also commodities, golds and metals they're traded there. So
Yeah, they're traded. Okay, see, they're traded and all of that, but as far as you know, they're not part of capital markets. They're a separate market onto themselves. See, because if you have, let's say, 1,000 tons of rice, you cannot use those 1,000 tons of rice to raise capital, right? So when you talk about commodity markets, it's specific to commodities and buying and selling of those commodities. Okay. All right. the next one, so these are largely your markets. Okay, now the next two that we're going to talk about, you guys might not be aware of it. Okay, and I'll cover that, is what we call as the order driven market. Okay, so what does this mean? Okay, when we talk about order driven market, is that any transaction that takes place on an exchange. Okay, on an exchange, on a stock exchange, anything on a stock exchange if you'd like. Okay, so that's what we mean by an order driven market. Okay, now what are some of the features of the order driven market, ODM? Okay, is that there is price transparency. Okay, now what do I mean by this, right? Is that right now all of us can find out what is the stock price of any listed company anywhere in the world. Okay, and that's why, and the reason why you can do that is because it's traded on the stock exchange. Okay, and because it's traded on the stock exchange, you have price transparency. Okay, so features is you have price transparency. Your well, let me put it this way, your counterparty is unknown. Okay, now what do I mean by this is that when you trade on an exchange, right, you don't know who you're buying from or selling to. Okay, and only who knows is the stock exchange. Okay, so stock exchange is managing that. Okay, next, order execution is guaranteed. Okay, now what do we mean by order execution is guaranteed? Basically, if you wanted to buy shares of any share anywhere in the world, right, the matching criteria is price. Okay, is price. Now if the price does not match, right, the order will not be executed. Now the idea is very simple, right? If you go into a store and the price of a particular product that you want to buy is 1,000 rupees, you will not be allowed to pay anything less than 1,000 rupees, correct? So you cannot go up to the cashier and say that, you know what, this 1,000 rupee product, I'll buy it for 1 rupee. He will tell you, please leave, right? So that's why order execution is not guaranteed. However, settlement is guaranteed. Okay, now why is settlement guaranteed is because there's something known as a clearing house. Okay, now the stock, so we'll talk about the participants, so we'll talk more about this when we talk about participants, but for now, why settlement is guaranteed is because there is a clearing house. Okay, now clearing house, what it does is that it stands in between the buyer and seller, and what it does is that on the day it's supposed to settle the transaction, right, they will collect the money from the buyer and they will collect the securities from the seller. Now when they collect it beforehand, what happens is that both buyer and seller cannot default. Okay, and that is why settlement is guaranteed. Okay, is this clear with everyone with order driven market? So any transaction that takes place on a stock exchange is order driven market. Now what are some of the features of an order driven market? Price transparency, basically you can find out the price anytime. The counterparty is unknown, you don't know who you're buying from or selling to. Order execution is not guaranteed. Now why is order execution not guaranteed? If you put the wrong price or if you put a irrelevant price, right, the order matching will not take place. Okay, and settlement is guaranteed. Settlement is guaranteed. Now why settlement is guaranteed is because there's a clearing house. Ganesh, what do you mean by example? So it's straightforward, right? So when I say price transparency, if I ask you to find out what is the shares of Wipro right now, you can do that, right? You can find the price. So that's what we mean by price transparency. Now counterparty is unknown means you don't know who you're buying from or selling to. You don't know who's on the other side of the transaction, only the stock exchange does. And like I mentioned, order execution is not guaranteed, is the transaction. So think about it this way, Ganesh, is that when you talk about order execution is not guaranteed, if you go to a store and let's say you want to buy a mobile phone, okay, and they say it's 25,000 rupees to buy this phone. Can you go to the cashier and say, no, take 1 rupee for this? Will they allow you to buy it? Exactly. So that's what, it's straightforward, right? Order execution is not guaranteed. So if you pay 25,000 rupees, then only you can walk out with the phone. Now, what is settlement is guaranteed is that, we'll talk more about this later, is that there's a clearing house that comes in between the buyer and seller and basically guarantees the settlement. Okay. Is this clear? I hope it's clear for everyone. It's pretty straightforward. Yeah. Okay. Shreya, what is the difference between a secondary market and an order-driven market? Okay, good question, Shreya. So basically, it's the same thing, but we call the secondary market as an order-driven market. Yeah, it's the same thing. Okay. All right. Now, again, on the flip side, right? So if you have an order-driven market, you need to have something that's on the other side, and we call that as a quote-driven market. Okay. Now, what is quote-driven market is any transaction that takes place in the OTC market. Okay, so OTC is again over the counter. No, so Jackson, options is a financial instrument. Order driven is a the secondary market. Okay, so options is a financial instrument. Completely different. Okay, now let's look at some of the features of the quote-driven market. Okay, now when it is traded over the counter, right, there will be no price transparency. Counterparty is known. Okay, it's the other side of the coin. Okay, there is customization. Okay, and here it'll be standardization. Okay, so customization. Order execution is guaranteed. Guaranteed, and settlement is not guaranteed. Okay, so it's the other side of order driven market. Okay, so are we all clear of what is the financial markets? Okay, so just to recap, so what's the financial markets? It's a marketplace, a market where investors and borrowers can trade in financial securities, commodities, and other fungible items at low transaction costs and at prices that reflect the demand and supply. So under that, you have your capital markets. Then capital markets are further broken down into primary and secondary. Then you have money markets, derivative markets, currency market, commodities. Then you have the order driven market, and you have the quote driven market. Okay, is this clear with everyone? Jackson, I hope you're clear on this. Options is a financial instrument. Order driven market is completely different.
Sir, is there any difference between order driven market and quote driven market?
Yeah, I've just listed the features. No, it's the complete opposite. It's the opposite of each other.
Sorry to interrupt, Lakshit.
Sorry?
Lakshit, sorry to interrupt. Even the options also exchange traded, right? Even the order driven market also is like stock exchange.
Yeah, see, they're traded there, but what your question is, options and order driver are almost similar. No. Options is a financial instrument. That financial instruments get traded on a stock exchange, right? So it's two different things. It's not, it's completely different. One is a financial instrument and one is a marketplace where it gets traded.
Okay.
Okay, so let's take a minute and write this down, if in case you haven't. Do you guys need a minute to write this down?
Sir, order driven market, the settlement is guaranteed.
Yes.
And under the quote driven market, the settlement is not driven, not guaranteed.
Yeah.
It's just like same as example of buying a mobile under the code-driven market.
Okay. No. What do
So
we? Okay, go ahead. Finish.
no, sir, please.
No. You complete what you're going to say.
I'm just asking about buying a mobile from a market of 25,000 rupees. The settlement is not guaranteed. It is the example of code-driven market.
Not like that. No. So you guys have to get the idea of what I'm trying to say here is that when we talk about order-driven market, it is all the transactions that happen on a stock exchange. Okay. Now, why I'm saying settlement is guaranteed is because there is a financial institution called a clearinghouse guaranteeing the settlement. Okay, there's somebody in between guaranteeing it. Okay, and if there is an issue, the clearinghouse will take care of everything. But in the code-driven market, settlement is not guaranteed. Why? Because there is no clearinghouse, there is no stock exchange. Okay.
Sir, can you please explain what is over the counter?
Over the counter. Well, it's the real world. Think about it that way. See, anytime you go and purchase something, right? Even from a mobile phone to a pack of biscuits, what happens? You do the transaction over the counter. So the store owner is on the other one side, and you're on the other side. And what's in between? There's a counter. There's a table. So you're doing the transaction over that counter or over that table.
Okay, got it.
No. Okay, Shreya, what do we mean by settlement is that it is transferring the shares to the buyer and the cash to the seller. That is when the settlement is completed. So think about it this way. So when you order stuff from Amazon and Flipkart, right? So you book the item on Amazon, so you get an SMS saying that you've ordered product. Then you get an update that it's packaged from the seller and it's delivered, etc. And then when the item comes to your house address, right, and you take the delivery of it, then only the transaction is settled with you, Amazon, and the seller. Okay, that's what we mean. Basically, in financial market terms, settlement is guaranteed. Is that the securities move to the buyer and cash to the seller. Okay. Order execution and settlement, they're two different things. Okay. Now, what do we mean by order execution is that when you buy shares on in the market, right, you have to approach a broker, and the broker will place that order for you on the stock exchange. Now, the job of the stock exchange is to match your order with the sell order. That is the job of the stock exchange. Now, the job of the clearinghouse is to make sure that whatever got confirmed on the stock exchange, the securities and cash will move between the buyer and seller. That is known as settlement. Is it clear? So market so the marketplace itself is the code-driven market. Arpit, the marketplace itself is the code-driven market. Okay, so take a minute and write this down. And let me know when you're done. Dipesh, what do you mean? You're saying discount? No, there's no discount or anything like that. Okay, 1 more minute. Let it start again. Okay, so let's look at these questions. Okay. So guys, please understand what I'm trying to say here is that when you talk about quote driven market, it's the full, it's real world. There's no stock exchange. Anything that happens in the real world is a quote driven market or the OTC market, right? Now, when we're trading in financial instruments, how that works is that they will, so investment bank A will call up investment bank D to do a deal. That's what we mean by quote driven market. There is an absence of a stock exchange. Okay. Now, stock exchanges examples are NSE, BSE, New York Stock Exchange, Dow Jones, all of that is a stock exchange. No, Sakshi, they're all different. So dealers are the people who work in a broking house who punch in the orders so that the orders go to the exchange. Okay. So basically, so dealers market and quote driven market are the same thing. No, they're not the same thing. What do you mean by dealers market? Yeah, but so order execution is guaranteed. Why? Because you can customize it. Okay, customization is there. That is why you can. It is guaranteed. Okay.
Sir, I am putting an example. Let me clear it's correct or not.
Okay.
Okay, so when I am trading in order-driven market, right? So there is regulatory bodies behind me. So that's why order settlement is guaranteed. And when I am trading in quote-driven market, the settlement is not guaranteed because of the regulatory bodies are not there.
Exactly.
That is correct.
Yeah, correct.
Yeah, thank you.
Okay, guys, customization, like you can structure or you can have different financial instruments as the underlying asset. Okay, guys, it's very simple, right? When you say customization, Imagine you can walk into a store and you can customize the way you want your mobile. You want a more memory, or you want a better camera quality. That is customization. Okay, so in talk about a financial instrument, you can customize the quantity, you can negotiate on the price, you can negotiate on the delivery date. All of that is customization. Okay, let's move on. Okay, so guys, a lot of these questions, right, are what do I say, what is possible on both ODM and QT. So guys, once again, let me kind of clarify. No, customization is only in code driven, not in order driven. Okay, guys, a lot of these questions, right, they are actually very much off topic. Okay, what you guys are largely asking questions are hypothetical situations. Okay, so when we finish this and you read the PPTs and all that has been given to you in your LMS tool, right, then you will understand this better. But a lot of these questions, right, are hypothetical questions that is not possible. I'm happy to answer it, but please understand that like what you guys are talking about, right, a lot of those questions, it's not to a certain extent relevant. Okay, but I'm happy to answer them so that your doubt is clarified. But please understand that what your thought process is right now is you need to change and bring it to what is actually happening in the market. Okay. No, Jackson, please listen carefully. A forward contract is a financial instrument. A code-driven market is where the financial instrument will be transacted. These are two different things. Guys, please be clear here is that we talk a lot of these questions you guys are asking about three different things. Okay, it cannot be the same thing. So please focus on what I'm saying here. So we're only talking about financial markets. So what are the different types of financial markets? Now, in that financial markets, various financial instruments will be traded. Okay, and that we'll talk about next. Okay, but you cannot say that quote driven market and a forward thing is the same thing. It is not the same thing. Okay, again, forward is a financial instrument. Where it is traded is in the financial markets. Okay, now let's talk about the next thing, which is your financial instruments. Okay, I think this is the longest I've ever explained financial markets. And I think a lot of you guys need to brush up on your basics, right? Because it's all over the place. Yeah, longest I've ever explained. And we need to finish by 4:30. I have another class at 5 and we still have so much more to go. Okay, so guys, please pay attention, stay focused. Okay, all right, now when we talk about financial instruments, right, you have different types of financial instruments. So under capital markets, okay, you have equities and fixed income. Okay, for example, so when I say fixed income, I'm talking about bonds. Okay, next you have money markets. Okay, so under money markets you have treasury bills. Okay, all short-term instruments, repo agreements. Okay, commercial papers, etc. Okay, next in the derivative markets, okay, you have futures and options. Okay, this is the instrument that is traded on the exchange. And in OTC you have forwards, swaps, options, etc. Okay, why I say etc is because the OTC market is very big. Okay. Next, what were the other on this thing? Okay, currency market, that's pretty straightforward. FX market is exchange of currencies. Okay, so largely, these are the financial instruments, and these are known as vanilla instruments. Okay, plain vanilla. Now you have something also known as exotics and structured products and all of that. Those are a lot more advanced. Okay, so under financial instruments, you have in capital markets, you have equity and fixed income. Money markets, treasury bills, repo agreements, commercial papers. Derivative markets, futures and options. Under exchange traded, forward swaps, options, and others is in OTC derivatives. Okay, is this clear with everyone? What's the next one? Financial participants. Okay, take a minute and write that down, please. Okay, great. Now let's move on. Financial participants. Okay, right. Okay, so let's start naming some financial participants. Okay, so let's start first with an investor. Who is an investor? It can be an individual or a institution, financial institution, investor. Okay, who has capital. Okay, and wants to invest in the markets to get a return. Okay, now when we talk about getting a return on investment, right, can anybody tell me what is the correct terminology? It's not ROI, return return on investment. There's another term that we use. Can you guys tell me? No, not ROE. So what's another term for
The rate of interest.
Sorry?
Rate of interest.
No, not rate of interest. Return on ROI, return on investment.
Is it dividend?
No. No, yield
Is it CAGR?
Just like fixed deposit in the banks.
No.
We invest our money to get interest from the banks.
Yeah, I mean, but the right terminology, right? So going forward, you guys have to use this terminology, and that's called as capital appreciation. So if you invested 100 rupees in the market, and the equity that you bought or the financial instrument you bought goes from 100 to 200 rupees, you have 100 rupees of capital appreciation. Okay.
It is same as in trading in stock market.
Yeah.
Okay, thank you.
So you have the investor. Now, if the investor wants to buy shares, can he go directly to the exchange? Where would they have to go?
Broker.
Brokerage firm.
Yes, so broker. Okay. Now, what is the role of a broker? It's to connect the investor with the stock exchange. Okay. And what does the broker earn from this?
Brokerage.
Brokerage.
Yeah. Commission. Yeah.
Commission.
Yeah. Commission, brokerage, all means the same thing. All right. Stock exchange. Okay. So it's a platform for buyers and sellers to transact. Okay. Buyers and sellers to transact. Basically, the stock exchange will match a buyer. Sorry. With a seller. That's what we mean by stock exchange. Okay. Oh no. Sorry, 1 second. Okay, so examples of stock exchange: NSE, BSE, NYSE, etc., LSE. Okay, all this is an example of a stock exchange. Okay, next is clearinghouse. Okay, now what's a clearinghouse? Is that the clearinghouse guarantees the
Ensure
settlement.
settlement.
Yeah, okay, ensures the settlement. Okay, let's use that word. Ensures the settlement between the buyer and seller. Okay, and this process is known as, anybody? Sorry, Hira, I didn't understand. Say that again.
Settlement is the interaction between the buyers and sellers, or what?
No, the guys, no. Settlement is this transaction settling into your demat account.
Okay, thank you, sir.
So a clearance house helps in like assuring that the buyers and the buyers and the people who sell it are like in good like in equal terms. Like they've made sure that the transaction has happened, right?
No. Stock exchange. So guys, please understand these are two different things. Stock exchange is one thing. A clearinghouse is something else. Stock exchange is where you go to buy and sell your securities. A clearinghouse is another financial participant that ensures that the shares come to your demat account and the cash goes to the seller. That is what we mean by a settlement. These are two different things. Please be clear. Stock exchange is where buyers and sellers are going to transact. Okay, let me put it this way. Amazon, you can think of Amazon as a stock exchange. So there are sellers on one side and you are on the other side, buyer. So what happens? You want to go buy a mobile phone or whatever it is. You put that into the search engine. You pick which one you want. You place an order. So order has been executed. So Amazon is acting as a stock exchange. Now, what does Amazon ensure happens? It ensures that the settlement takes place. Now, what do we mean by that? Is that Amazon will hire a delivery agent, or they will have their own delivery agents, will make sure that you get the mobile phone. Now, once you get the mobile phone delivered to your house, then only the money will be released to the seller. And Amazon will take a certain transaction cost for that particular transaction. So these are two different things. Please don't mix them up. Okay. So when you talk about clearinghouse, it ensures the settlement between the buyer and seller. This process is known as novation. Novation. Okay. Is this clear with everyone?
Yes, sir.
Next, we have a depository. What is the role of a depository? Does anybody know?
So it maintains accounts of our stocks and other things that we maintain in our demat account.
Okay, so when you talk about a depository, right, their main job is to, well, not ensure, rather, their job is to change the name of the shareholders. Okay, now what does this mean, right? Is that if I own, let's say, 1,000 shares of Infosys, okay, and on Monday, tomorrow, I sell that 1,000 shares to Infosys. Not to Infosys, but to somebody else in the market. So what will the depository do is that they will remove my name, okay, from the company's register and will add the 1,000 shares of whoever bought that from me. Okay, that's the role of the depository. They are responsible to change the name of the shareholders. Okay, is this clear with everyone? Next, we have custodian. Now, what's the role of custodian is that they
Sir,
say,
to change the name of the shareholders by selling the securities, na?
no, my friend, the securities, I own 1,000 shares of Infosys. It is already in my name. So when I sell the 1,000 shares, what should happen? My name should be removed, right? Because I'm no longer the owner of Infosys. Yes or no?
Okay, I got it.
Yeah.
Okay,
So
okay.
I sell my shares and the depository will remove my name from the company shareholding pattern and will put another person's name, whoever bought them from me. Okay. So when we talk about custodian, they safeguard the client's assets. Okay, now when we talk about these assets, it is both in terms of securities and cash. Okay, now let me clarify one thing. Okay, in India, if anybody trade here, first of all, let me ask that question.
I used to.
You used to. Okay, so in India, and those of you who studied capital markets, what they tell you is that all your shares will be held with a depository. Now, for retail investors, this is correct. So when you buy shares as a retail investors, it'll go sit in your demat account. Okay, and the money is kept with your broker. Okay, so that way you cannot default. Okay, so that's the first thing. Now, when you talk about institutional investors, okay, the big guys, the hedge funds, the mutual funds, the um, you know,
Companies.
yeah, corporates and all of that, right? They have to maintain their cash and securities with a third party, and that's known as a custodian. Okay, now examples of a custodian are Northern Trust, okay, State Street, okay, Bank of New York, okay, etc. Right? So these are examples of custodian. Now, please don't confuse the two. Totally two different things. Okay. Depository's main role is to ensure that name change happens between the buyer and seller. And the custodian for large financial institutions, they hold on to the client's assets. Okay, both in terms of securities and cash. And those are companies like Northern Trust and State Street and Bank of New York Mellon, etc. Okay, all right, any other financial participants you guys can think of?
Sir, issuers.
Okay, issuers, fine. So who is an issuer?
Hedger.
Financial regulators.
Okay. So first question, who is an issuer?
Sir, any government entity, legal entity, or any legal firms can be issuers.
Okay. Can be a lot of different. So it can be governments, it can be even corporations, etc. Okay. All right. Anything else?
So, ombudsman.
No, ombudsman isn't. They are part of the regulatory arm. You can consider them. I don't see why not. Okay. But generally, you go to them in case you have an issue. Okay.
Okay, sir.
Okay.
Financial regulators.
That we have a separate this thing itself. So we'll talk about that next. Okay. But any specific participants? Okay. We missed banks. No. So Jackson, a hedger, right? Is basically an investor, right? They want to hedge this thing. Okay. So when we talk about banks, right? We're talking about commercial banks, retail banks, and investment banks. Okay. What else? Anything else?
NBFCs.
Okay, but again, we're talking more from capital markets perspective. Okay, so largely these are different financial instruments. Sorry?
Security Exchange Board of India.
That's a regulator, so we'll come to that. So, no, see guys, that's agreed it's part of the participants, but we'll talk about it separately. Okay, so please take a minute and write this down. All right, I think most of you are done. Okay, so let's move on. So when we talk about the next thing, right, is financial regulators. Now, who's a financial regulator? What do they do? Is that they safeguard. Sorry, that's the wrong spelling. Safeguard. Who? They safeguard the retail investor. Okay, and they come up with policies and procedures. Okay, yeah, I think that's wrong spelling. Is that correct spelling? Procedures. Okay, there you go. To protect protect the financial markets as well as the participants. Okay. Now, as a bit of homework, right? What I want you guys to do is find out the regulators for the following countries, for the following. So India, of course, USA, UK, France, Germany, Japan, China, Hong Kong, Singapore. Now I want you guys to find out the capital markets regulator, banking regulator, insurance regulator, mutual funds regulator, pension funds regulator, anything else? Capital markets, banking, insurance, mutual funds, pension funds, okay, and derivatives. Okay, regulator. Okay, so as a bit of homework, okay, I want you guys to find out the regulators, you know, for India, US, UK, etc. For these, so for example, let's take India, right? So capital markets regulator is SEBI, banking regulator is RBI. Okay, like that. I want you guys to find out for all these countries. Okay, is this clear with everyone? And I think all of you might not have my email ID. Okay. Oh, sorry, 1 second. Why is it going to only one person? Mm-hmm. 1 second, there's some issue. Well, okay, I don't know. I'm not able to put it in this thing, the chat. Okay, so here's my email ID. Okay, so maybe take by tomorrow evening, you guys can send it to me. Okay. All right. Next, you have financial services. Okay. So one thing you guys have to understand is that if you're already working in the banking sector, you're in the financial services sector, right? So if you're working in investment banking, it is financial services. Okay. Now, financial services is a broad terminology. Okay. Insurance is also considered to be financial services. Working in the broking industry is also considered as a financial service. Okay. Now, what are the different types of financial services that are offered? Okay. Now, when we talk about retail banks, what kind of services do they offer? Loans, credit cards, debit cards, savings accounts. Okay. What else? Loans. So when I say loans, it's everything. Home loans, car loans, vehicle loans, credit cards, debit cards, savings accounts, right? Anything else?
Current account, FD, RD.
Ah, yes. FD, RD. Okay. Now,
Current accounts.
so see, your current accounts will come under the commercial bank side, okay, because that's for the business side. Okay. Then again, loans, etc. Loans. So largely, commercial banking is focused on the loans side. Okay, current accounts and loans. Okay. Anything else in commercial banks?
So post office is the example of retail banks, no?
No.
Overdraft.
No. Post office, they have their own savings schemes and all of that. You open it up with the post office. You might use the bank as
But post office.
That's what I'm saying. You might use the bank
but
as an intermediary, but you don't. Post office you don't do it with a bank.
But the post office also offers FD and RD.
That's what I'm saying, my friend. Is that Post office is something completely different, and what I'm talking about is completely different. Okay. Okay. Next, you have your investment banks. Okay. Now, what kind of services do they offer? Right. So you have mergers and acquisitions.
Merger acquisition,
Sorry.
IPOs.
IPO.
Okay. IPOs. Okay. Research. Okay. Advisory. Anything else you guys know?
Valuations.
Yes.
Prime brokerage.
Okay. Prime brokerage. Okay, etc. So okay. So these are some of the services that are given by an investment bank. Okay. And when you guys go through the PPTs right today, you will cover the rest. Okay, you will understand the rest of them. Okay, so are you guys clear with what is the regulator and what are financial services? Okay, take a minute and write it down. Arpit, is the same thing. Finance industry and financial service industry means the same thing. Okay, take a minute and write. No, so Shreya, some of these services, right, like mergers and acquisition and all that, we will not talk about it because it's not part of your curriculum. Okay. But however, if you want reading material, you can always email me and I can send it to you. My friend, retail bank. What's your name? By the way, it says admin, but what's your name?
Yeah, my name is Saurabh.
Saurabh.
Saurabh
Okay.
Khatri. Yes.
Okay, Saurabh. Okay, fine. So, again, Saurabh, it's all of it. No, HDFC Bank is a retail bank. SBI is a retail bank. Yeah, you guys should know all of this, right? So Shubham,
So what's the difference between the both commercial and retail?
so retail bank, the customer base is individuals, you and I. Commercial bank is companies, corporates, small scale industries, medium scale industries, all of that. Mm. So Shubham, you will get access to the our LMS tool, LearnTron. Okay, so on that, all the PPTs are there. Okay, you can contact. I think you're from Delhi, right, Shubham? So if you're from Delhi, you have to contact Damni, but if you're from Bangalore, you have to contact Siddharth. Okay. Anurag, prime brokerage is basically specialized services that an investment bank gives to its hedge fund clients. Okay, we'll talk about it later. Okay. Okay. Let me know when you guys are done writing. Okay. Cool. Okay. All right. Now this basically rounds out the financial system. Okay. So we talked about the markets, the instruments, participants, regulators, and services. Okay. All right. Now this is what you guys need to do. Okay. Okay. So I hope you guys have taken the notes down and didn't just this thing. So you got to read your notes. Okay. Then you have to read the PPTs. Okay. Then you have an online assignment. Okay, in LMS tool. Okay, and you need to finish that. Finish that. Okay. So you reread your notes, you read the PPTs. Now, how does the PPTs look like? Give me 1 second. So it looks like this. So financial system. So basically whatever we spoke about, right? Introduction to financial system, structure, functions, types of financial markets, capital, primary, secondary, money markets, participants, regulators, and investment banks. So so what I've done is I'm giving you the notes, but you guys need to read all of this, and you'll get more information. Okay, and that is how you'll be successful in this program, is by reading the PPTs. Okay, and once you're done with the PPTs, there is an assignment in the LMS tool. Okay, Vibhor, it's on the LMS tool. So again, if you are from the Delhi office, right, you can speak to Damini. If you're from Bangalore, you can speak to Siddharth. Okay. All right. Now let me clarify. Let me do one thing also. Okay. Before. Okay. Let me put this in. So your next class, next 2 classes will be equity and fixed income. Okay. Now what I want you guys to do is that, and you guys have to do it, right? Is that I want you guys to spend 15 minutes on each of these topics. Okay, so that you get an idea of what we're going to cover today. Okay, so then what happens? So if you so what I'm asking you basically to do is pre-read the topics. Okay, just a quick 15-20 minutes, go through the PPTs, and you will have an understanding of what we're going to talk about. Okay, because like what I mentioned, right, I'm more than happy to answer the questions, but you guys have to understand that a lot of those questions, right, are not relevant and they're illogical. Okay, so what happens is once you pre-read the topics, right, then what will happen is that then you'll get a clear idea of what we're going to cover in class, and then your questions will be more relevant and you'll be asking the right questions. Okay, but again, I'm more than happy to answer all your questions, but please realize that a lot of these things, if you mix it up in your head, right, then you'll get confused and it'll be very difficult to clarify your doubts. Okay, because your understanding will get stuck. Okay, so by mid next week, I want you guys, by Wednesday, Thursday, I want you to spend 15 to 20 minutes going through the PPTs for equity and writing down all the doubts that you have, and as and when we cover these topics, the doubts will get clarified, and in case it doesn't, you feel free to ask. Okay, so by Wednesday, Thursday, I want you guys to spend 20 minutes on equity and another 20 minutes on fixed income. Is this clear with everyone? So that our discussions become more focused and it does not get sidetracked. Okay, and then you'll have an understanding of what we're talking about. Arpit, it'll be next. So your sessions will be on Saturdays and Sundays. Okay, is this clear with everyone? Okay, so I've given you guys, so I want you guys to find out the different regulators, and I want you guys to email it to me by tomorrow evening. Okay, so today's Sunday, maybe you can chill out for a bit or whatever it is, but then by tomorrow evening I want you guys to send it. Okay, across both this offices, both Delhi and Bangalore. I'll have a look at it, and I want for each country, and I want it for each market. Okay, so I want it for capital markets, insurance, everything, banking, mutual funds, derivatives. Now, one thing, you might not find it for every country. Okay, whatever you can find, you write it down and you send it to me. Okay, all right, any other questions you guys have? So what are you going to do now is you're going to reread your notes, or if you want to take a break or have lunch, whatever it is, reread your notes, read the PPTs, there's an online assignment homework in the LMS tool. Try and finish it today itself. Okay, and once you finish that, then you're done. Okay, then by mid next week, your next two classes will be equity and fixed income. Spend 15 minutes, okay, on each of these topics. Pre-read them before coming to class so that you have an idea of what we're going to talk about, and our discussions will be more focused and concentrated. Okay. All right. And some of you guys who come from a technical background, I think I heard one or two come from technical background. You guys need to kind of start brushing up and understanding what is capital markets and what is finance in general. Okay. All right. Is this clear with everyone?
Excuse me, sir.
Yes.
Hello.
Yeah. Go ahead.
So, for example, we did financial services today. We read about them. So it was an overview, right, for the services of investment banks. For example, I don't know anything about prime brokerage or valuations or advisory. Are we going to, study about them in detail in
No. So
further classes or not?
no. So we won't be studying about valuations because that's a different program altogether. Okay. Please understand that you're interviewing so when you go for interviews, they're not going to ask you about valuations, mergers and acquisitions. They just want to know whether you understand what that terminology means. That's it. Because your questions will be a lot more different. It'll be very different. Okay. Because they're going to ask you questions such as, what's the difference between a depository sorry, between a depository and a custodian? What's the role of a regulator? Explain the steps in an IPO process. What is derivatives? What is FX? Your questions will be more financial instruments related. It will not be on what kind of services an investment bank provides.
Okay, sir.
Okay. All right. Let me take attendance as well. Okay. Did I miss anyone? So Annette, Anurag, Aparna, Arpit, Deepesh, Ganesh, Hira, Hemraj, Hema, Jackson, Lakshmi Narayan, Mirnaik, Mukambika, Nilesh, Rahul, Ritam, Sakshi, Shreya, Saurabh, Shubham, Vibhor. Anybody else? Anybody else I missed? Okay. So if there's no other questions, we'll wind up for today. See, for some reason I can't even see. Okay. All right. Thanks, guys. Bye bye. I don't. This is an issue. I don't know if you guys. If you have any questions, you can unmute yourself. There's a problem with the chat. Yes.
Will we get these notes?
Yeah, you will. I hope that, but you better be writing them down as well.
Okay.
You're not writing them. You need to write them, my friend.
Okay.
Hmm.
So Rakshit, when you go to the LMS website,
Mhm.
there's this module IB and financial systems.
Yes.
So under that, there's this assignment on financial system markets with 15 questions. That's the one we're supposed to complete, right?
Yes, exactly.
Okay, all right. Thank you.
Thanks. Bye bye.
Thanks. Bye.